Welcome back to the Pro Ticker Podcast, your Friday morning edition, covering major financial magazine headlines, everyone. Today is Friday, August 8th, 2025.
Yeah.
And we are diving deep into, well, just a truly fascinating collection of recent reports. We're pulling from Yahoo Finance, CNBC, Bloomberg News, a lot going on. So our mission today, we're going to unpack just a remarkably busy period. You've got markets, world events.
Yeah, you've got major policy shifts, corporate earnings coming in, geopolitical stuff.
Exactly. It's all kind of intertwining, isn't it? We're going to look at how decisions made, say, in Washington are rippling through, well, everything. Retirement accounts, global trade.
Even, the leadership of some of these huge tech companies. And what really stands out this week, I think, is just the sheer breadth of how interconnected all this news is. It really spans from, your personal financial planning.
Right, your 401k.
All the way to the nuanced impact of global tariffs and even, the internal dynamics inside big tech. So drawing from that reporting in Yahoo Finance, CNBC, Bloomberg, we'll try to connect these dots for you, help you understand not just what happened, but why it matters.
Okay, let's kick things off then. Let's unpack what could be a monumental shift in retirement investing. As reported across, well, multiple outlets, including Yahoo Finance, President Trump signed an executive order yesterday. And this could dramatically change how millions of Americans invest their 401ks. Now, this isn't just a minor tweak, It's a truly significant move for an industry that has traditionally been pretty conservative.
Right. Very much focused on publicly traded stocks, bonds, maybe some index funds. Pretty standard stuff.
And the core of this order, it paves the way for these, well, alternative assets.
Mm-hmm. Things like, cryptocurrencies, private equity.
Even real estate.
Yeah.
Potentially gold. Getting those into 401ks, this really challenges that long-standing, often passive investment philosophy, doesn't it?
It really does. It could open up entirely new avenues for growth, I suppose.
But it also introduces a whole different set of risks for the average retail investor, wouldn't you say?
Absolutely. And the White House, as highlighted in reports, Yahoo Finance mentioned this, they frame the order as a way to give American workers more investment options, for stronger and more financially secure retirement outcomes.
Okay.
And there's a compelling argument there. Currently, over 90 million Americans in these employer plans, they're restricted from these kinds of assets.
Right.
Well, wealthy investors, big institutional funds, even government workers, they often have access. So the idea is this move kind of democratizes access.
In theory.
Right.
So what was the immediate market reaction? Did we see one?
Oh, yeah. Major cryptocurrencies, crypto-related stocks, they rallied pretty hard on Thursday, even before the official announcement, really.
Okay.
Bitcoin, BTC, USD, that was up 1.39%. XRP USD soared over 10%. And shares of exchanges like Coinbase, Coin rose 2.37%. Robinhood Heat up 5.28%. Though, both saw slight pullbacks in pre-market Friday trading, just to note.
Right. And what about the traditional players, the big asset managers?
Well, even they seem supportive. Companies like BlackRock, KKR, they stand to benefit, obviously, from managing these new funds.
Sure.
BlackRock's chairman, Larry Fink, he emphasized, this was cited by Yahoo Finance, private assets are legal in retirement accounts. They're beneficial. And they're becoming increasingly transparent.
Increasingly transparent. That's interesting. Suggests maybe they weren't always.
Well, yeah, that's often been the criticism. Less transparency, less liquidity.
Okay, so while the potential for stronger outcomes sounds good, there are warnings, right?
Definitely. Experts are advising caution. Lisa A.K. Kirschenbauer, she's a senior advisor at Omega Wealth Management, quoted in Yahoo Finance. She really emphasizes that own what you know principle.
Good advice generally.
Absolutely. And she warns that private assets are fundamentally less liquid. What does that mean for you? Harder to sell quickly if you need cash.
Especially, as you get closer to retirement. Needing those required minimum distributions, RMDs.
Exactly. Or if you need to roll over your 401k into an IRA, that illiquidity can be a real headache.
So she's urging caution. Keep it to a small percentage.
Yeah, she suggests maybe a maximum of 5–10% to start. Given that illiquidity and complexity, seems prudent, right?
Yeah.
Especially with life savings.
It does. But playing devil's advocate here, Larry Fink's point about pension funds, he says they use private assets and outperform 401ks.
Right, he did make that point. Pension funds, he noted, have invested in these for decades, and they often outperform 401ks by about 0.5% annually.
Which doesn't sound like much, but
But over 30 or 40 years, it adds up significantly. That's a key distinction, though.
how so?
Well, when Fink talks about pension funds, he's talking about huge, sophisticated institutions. They have professional teams doing due diligence, managing these illiquid assets.
Right, they have resources the average person doesn't.
Exactly. And super long time horizons, vast capital. They can handle volatility and liquidity issues much better.
And what are private credit and private equity, just quickly?
Sure. Private credit is basically direct lending to companies. Private equity is owning stakes in private businesses, different from public stocks and bonds. Different risks, different potential returns.
Got it.
And BlackRock, showing they believe in this, they're launching a target date fund that includes private credit, private equity, other alternatives. They're aiming for that extra 0.5% annual return, which they claim could mean 15% more money over 4 decades.
And others are jumping in too.
Oh, yeah. Yahoo Finance noted Empower, Apollo, Goldman Sachs, Voya, Blue Owl. They're all lining up to offer similar products.
So for you, the listener,
Yeah.
what's the takeaway here?
It really boils down to balancing opportunity with risk, understanding the risk.
Yeah, it's great that access is being democratized, maybe, but it demands a lot more from you, the investor, more homework.
Absolutely. You really need to know what you're putting your retirement money into. It's not just picking an index fund anymore.
Okay, let's pivot now. From personal finance to the bigger global picture. Tariffs. President Trump's reciprocal tariffs are now officially in effect, hitting dozens of countries. Plus that 10% baseline levy on others.
Mm-hmm.
Though interestingly, those steeper tariffs on China, still on hold. CNBC reported the August 12th deadline is likely getting postponed again.
Right. But what's really striking, according to CNBC, is the market reaction.
Yeah.
Or maybe the lack of reaction.
Exactly. Global stocks seem largely numb to these latest announcements, which is a big change from the sell-offs we saw back in April, remember?
Oh, yeah, that was rough. So why the numbness now?
Well, it's even got this catchy nickname, apparently. The taco trade.
Taco. Seriously.
Yeah, short for Trump always chickens out. That's what CNBC is saying investors are thinking.
So the market thinks these are just negotiating tactics, not final policy.
That seems to be the view, expecting rollbacks, delays, which explains the muted response. Like India, for example. They got hit with a big tariff jump, 25% to 50%, for buying Russian oil.
And their main stock index, the Nifty 50, barely moved. It really suggests the markets learned to differentiate rhetoric from, actual long-term policy.
Okay, but while the markets might be shrugging it off, what about businesses? That uncertainty must have an impact, right?
That's a critical point. A CNBC report highlighted this risk. Think about building a plant. Costs hundreds of millions.
Yeah.
If tariffs come in, then get removed 3 years later, that huge investment might suddenly look pretty bad.
Right, it could be written off.
So this constant flux, even if markets seem numb, it could be quietly deterring that big long-term investment, impacting growth in ways we don't see day to day.
Interesting. Okay, so maybe not total numbness. What about specific commodities? Any big moves there?
Oh, definitely. Gold saw a really weird spike. New York futures jumped way above London prices.
Why?
It happened after U.S. Customs clarified that 1 kilo and 100-ounce gold bars would face tariffs.
Wait, gold bars? Tariffs on gold?
Yeah. The Financial Times reported it. Bloomberg and Yahoo picked it up too. It really surprised traders. December contracts soared to like $100 premium over London's spot prices.
Wow. That's huge. They usually trade almost identically, don't they?
Exactly. It suggests a real disruption in how gold is flowing globally.
So what's the bigger picture implication?
Well, Bloomberg suggests it could mess up trade flows, especially from places like Switzerland, a key refining hub. Their gold exports have been an issue in trade talks before.
Huh. Could it be a mistake?
There's speculation it might be. Maybe an error by customs could face legal challenges. It's just so unusual.
Shows how these sudden tariff decisions can shock specific markets, even if stocks are calm.
Right. And meanwhile, oil's been on a losing streak, longest since 2021, though it's steadied a bit today near $66 a barrel after 6 straight drops.
And that's tied to Chillick.
Markets digesting U.S. efforts on the Ukraine war, plus those tariffs on India for buying Russian crude. It's all interconnected. Diplomacy, energy, trade.
Okay. Busy week for political appointments too, right?
Yeah.
Affecting economics.
Yeah, President Trump nominated Stephen Mirren, who's currently chair of the Council of Economic Advisors to the Fed Board of Governors.
And Mirren is known as, Well, a key architect of the tariff policy, right?
Yeah,
And the whole economic agenda.
that's right. And the speculation, reported by both Yahoo Finance and CNBC, is that his appointment might add another voice pushing for interest rate cuts.
Maybe as soon as the September meeting.
Potentially. His economic thinking is often seen as favoring looser monetary policy, so it could shift the Fed's internal balance.
It's a short-term appointment, though, isn't it?
Expires January 2026, yeah. But the White House is also looking ahead to the next Fed chair, so this could be strategic.
Raises questions about Fed independence, maybe? Appointing someone directly from the White House economic team.
It certainly fuels that debate.
And speaking of politics and business, Intel. Big story there.
Huge. The CEO, Lip-Bu Tan, is under direct fire from President Trump, called him highly conflicted on Truth Social, demanded he resign.
Wow. And this came after Senator Tom Cotton raised questions.
Yeah, Bloomberg and Yahoo detailed Cotton's letter questioning Tan's long ties to Chinese companies. Specifically, his past role on the board of SMIC,
That's Meek being?
Semiconductor Manufacturing International Corp., China's biggest chip maker, which
Oh.
is obviously sensitive given the U.S.-China tech rivalry.
Right. Semiconductors are critical. National security stuff.
Exactly. So it highlights this really tricky intersection. Corporate leadership, national security, political pressure.
How did Intel respond?
They put out a statement, Yahoo Finance reported it, emphasizing commitment to U.S. national and economic security interests and aligning with the America First agenda.
And Tan himself.
He told staff the reports were misinformation, asserted he always operated legally and ethically. But it's a rare thing, this kind of direct political challenge to a major CEO.
Sets a precedent, maybe. How companies navigate these geopolitical pressures.
Could be. It forces companies to be really clear about loyalties and how they balance global business with national demands.
Okay, let's shift to earnings. Definitely a mixed bag this week, wasn't it?
Very much so. Some big winners, some notable losers. CNBC reported SoftBank shares surged over 10% today, new record high.
Why the jump?
Better than expected profit. Their vision funds had the largest gain since 2021. And huge AI investments. They put $7.5 billion into OpenAI.
Wow.
Plan to increase it maybe to $22.5 billion. Plus a stake in that massive $500 billion Stargate data center project.
Really shows the market excitement around anything AI, doesn't it? Rewarding those big bets.
Absolutely. And CNBC also highlighted Block, formerly Square, up nearly 7% after raising profit guidance.
Okay.
Expedia shares skyrocketed over 15%. Great earnings, raised guidance, maybe good news for travel. Instacart also climbed over 10%.
So strength in payments, travel, grocery delivery.
Seems like it. But it wasn't all good news.
No. Pinterest slumped 10%, profit miss. And Sweetgreen, the salad chain, tumbled 23%.
Ouch. Yeah, they cut the revenue guidance, maybe reflects some consumer caution or just more competition.
And the whole software sector seemed to take a hit. Atlassian, DocuSign, ServiceNow, Salesforce, all down.
Yeah, that was noticeable. CNBC suggested it might be partly due to the buzz around OpenAI's new GPT-5 model. Potential disruption.
You think it's just that? Or maybe something deeper, like are software valuations getting reevaluated? Or are some markets getting saturated?
That's a really good question. While GPT-5 is splashy, yeah, maybe it is a deeper reevaluation. Investors might be looking harder at valuations now, especially for companies not directly riding the AI wave or those facing more competition from AI native stuff. And yeah, maybe some enterprise software markets are just maturing after years of fast growth.
Interesting. Okay, one last big piece. Geopolitics. Armenia and Azerbaijan.
Right. A potentially huge development reported by Bloomberg News. President Trump announced he's hosting their leaders at the White House today, and the expectation is they'll sign a peace deal to end decades of conflict.
That's the Nagorno-Karabakh conflict, right? Super complex, long-running.
Incredibly complex, caused immense suffering, regional instability. So a peace deal would be truly monumental for the South Caucasus region.
Strategically important area, too. Energy routes.
Absolutely. And Trump hailed it as a big success, naturally, saying, many leaders have tried, with no success until now, thanks to Trump.
Well, if a deal gets signed, it cuts through decades of deadlock. That would be significant.
It really would. A notable diplomatic achievement, if it holds, shows how these seemingly distant geopolitical shifts can suddenly become major headlines.
Okay, so let's wrap this up. What does this all mean for you listening to this deep dive? We've seen how government policies, whether opening up 401ks or slapping on tariffs, create both opportunities and, well, big questions. for investors, for businesses.
And the markets, as those financial magazines highlighted, seem surprisingly adaptive now, learning to maybe parse negotiation from actual policy.
Yeah, maybe.
But the underlying currents are powerful, right? This push for more financial options, the complex dance of global trade, that ongoing tension between geopolitics and corporate operations.
It really underscores that being truly well-informed today, it's not just knowing the headlines.
No, it's about understanding those deeper connections, the implications for your own financial world.
It definitely gives you a lot to think about. How these decisions, even on gold bars or chip maker CEOs, can ripple out and eventually reach your own investments.
Yeah.
So keep asking yourself, what's the real underlying impact of these stories on your financial future? How can you best prepare? That's all for this deep dive. We hope this exploration has given you a clearer picture of the financial and political landscape. We'll see you all Monday morning with new headlines from major financial magazines.